Hi, and welcome to the weekly market update for the week of February 22nd. I'm Dennis Morton here with Cody Demmel. Cody, how are you?
Good, how are you?
Yeah, well, I'm less confident about what week it is and more confident that it's just not snowing now. So that's how we're marking the days anymore. Is it snowing or not? So we're in the melt. Today we're going to be talking about some lessons learned from the last year. We are in the middle of February is the 1-year anniversary from the market peak right before everything fell apart during the pandemic. So we're going to share some reflections on the last 12 months. We're also going to talk about inflation expectations, and there's a great sigh of relief that the markets felt when Chairman Jerome Powell spoke this week about Fed policy. And finally, we're going to end today talking about Beanie Babies, collectibles, and all those things that are being bid up to high prices in the collectibles market. Okay, Cody, let's start with that article. This was from Morningstar, from John Reckenthaler, talking about my 2020 investment lesson, the peril of overconfidence. What did he share as his lessons from last year?
There was a lot of important lessons that he pointed out. Markets are obviously forward-looking, so we got to remember that when we're looking at the short time frame. And that's another thing he pointed out, is to make sure that you have your time frame in mind when you're investing, especially in the equity side of things. We know how volatile 2020 was, and it ended on a good note, so we always have to remember that. And then he just went through a couple of the reasons why the equities have rallied so well over the past year, even with obviously the pandemic and everything that happened.
Mm-hmm. I love that he used the word overconfidence in the title of his piece, because I think sometimes we really want to have confidence as investors. But the paradox is that our confidence doesn't come from knowing exactly how things are going to play out. It's from knowing that we have no idea how things are going to play out. You have to be confident to understand that. And he said that he expected the markets to take a long time to come back, to have a lot of bouncing around at the bottom and building back up. It didn't happen that way. And he said, here's why. One of the reasons was the structural strength. The economy was in a real good place to start. It wasn't like we were teetering on the edge and COVID blew us into the chasm. Things were going pretty well this time last year. The second thing was Fed intervention. And the government learned its lessons from the great financial crisis. They came in fast, and the Fed opened up the spigots, and here we are. And the third thing was just low interest rates. That's been kind of interesting. They went down and stayed low for a really long time, which means you got to be in the equity markets.
Yeah, I like how he named it. It was weak competition, because besides equities, I mean, you were going to go into a 10-year treasury and get 0.5%. But we talked about it before. There wasn't really another alternative, especially when the S&P at that point was yielding over 2% in dividends.
Yeah. So, Cody, Jerome Powell, the Federal Reserve Chair, spoke this week about Fed policy, and there was a lot of question about interest rates have risen a little bit recently, not because the Fed raised them, but the market has been raising longer-term interest rates. Tell us about what happened in that discussion and how the Fed's thinking about inflation.
Yeah, so it was a good update from them yesterday. Market was selling off over the past couple of weeks, and I think after he spoke, they just felt more comfortable that they're going to keep the policy the way it is for the long term. Even if we do continue to get good job numbers and we see a strong labor market, they are not going to tighten the monetary policy just because of that, which was a good note. And he of course said that they're going to keep their eye on the inflation rate, and they're still hoping that it gets back to the 2% mark. So they're definitely going to keep an eye on it, and we spoke about it before, so it's something to keep in mind.
Yeah, I mean, the Federal Reserve can anchor short-term rates at or near zero, but once you get out to 10-year, 30-year, the market really dictates all that fluctuation, and we've seen almost a 0.5% increase in the rate that's paid on 10-year treasuries, which is a huge move. And what that ends up doing, and one of the reasons that creates volatility for the stock market is, if treasuries are paying 0.75%, then, as you just said, I'll take my risks over here in stocks. But suddenly, if they're paying 1.25, 1.4, some market participants might say, hey, you know what? I'd rather go earn a safe 1.4 than own stocks at those good levels. So it kind of changes the dynamic. And you did see, as he was talking, you saw the market start to rally back yesterday. And I think there was a lot of relief, because liquidity is causing asset prices to go up. And that brings us to the third thing that we wanted to talk about, which is kind of investment related, but more just kind of asking what in the world is happening right now in certain marketplaces. Cody, tell us about the collectibles market and how that kind of relates to investing right now.
Yeah, so there has been a strong boom in pretty much any collectible you can think about, whether it be cards. I mean, now they're going over to just video graphics. I mean, it's just in everything. We've seen just a crazy boom in the collectible side of things. And I think it's for a number of different reasons. People are scared of missing out, the scarcity of it. They want to have something to talk about. So they're getting into the collectible. And then, of course, obviously just the entertainment. We're still, unfortunately, majority of the time stuck at home. So being able to do something, collect something, and having a forum or a community to talk about it, I think has really increased the interest of it too.
Yeah, we read an article by Ben Carlson over at A Wealth of Common Sense, and he brought up the historical story of Beanie Babies. So anybody who was around in the mid to late 90s might remember the story of Beanie Babies, which was a brilliant marketing move that was based on scarcity. That, hey, you can buy these things and they're not going to be here forever. And then we're going to pull it back, and people just dove in and were trading these things. In his story, Carlson points out that at one point, this is the mid 90s, so it's the infancy of the internet economy. But at one point, Beanie Baby trading made up 10% of the commerce on eBay, which that's amazing. I mean, adults were buying them and selling them and sharing with their kids and everything else. But Carlson, he had a great point in there. And he said, storytelling is a superpower when it comes to driving people's behavior. And you tell this story about why you need to buy this and everything else. And with a good story and rising prices, people will just dive in. And Cody, I was reading this and I was thinking about, you can maybe relate to this as well. I remember being in training as a broker in the mid 2000s, and they would tell us exactly this: create a story, pick a stock, create a story around it. We'd say something like, call up a prospective client and say, hey, everyone's going to have a smartphone here in the next decade. Don't you want to get in on smartphones? And you create that fear of missing out and drive people's behavior. It's a selling tactic.
Yep.
And you get that scarcity mentality. I also thought it was interesting that Carlson points out Beanie Babies happened at the same time as .com. Same animal spirits, right? What are some other things? Talk about some of the other places people are parking money right now. Some places that might not have been as popular a couple of years ago, like whether it's SPACs or some of these other places. Where is money flowing in addition to collectibles?
Yeah, so SPACs, I think, is definitely one of the major investment vehicles that have been popping up. It's been around for a while, just wasn't popular. But in 2020, we saw a record number of SPACs IPO. There was almost 250. And so far in 2021, we're already over 160 SPAC IPOs. So we're on pace, obviously, well to break the record of last year. And I think it's, like you said, it's a boom and people are just piling into it. So just have to be careful with some of the storytelling going on there.
Sure. And for those of you not familiar with the concept of a SPAC, so imagine that there is a stock that you can buy or a fund that you can buy on a public exchange that's launched by a group of investors. But all it is a pool of cash that's raised from the likes of you and I. And you put your money in, and they go out and look for a private company to then bring public. So this idea that you have hundreds of these being launched as just black boxes that you don't know what you're going to end up owning, and then they're bringing companies public. I don't know. I don't know how this ends, but that seems to me kind of the peak of speculation, is that I'll just put my cash in here and tell me what I bought later on. Doesn't matter.
Yeah. I think some of them definitely have a purpose. Virgin Galactic was one that was done a while ago, and that's done really well. But the one recent example that just happened yesterday, Churchill Capital was one of the SPAC IPOs that went public last year, ran up 400% year to date, just on the possible talks of merging with Lucid Motors, which is supposedly the next Tesla. They announced the deal yesterday, and then the Churchill Capital SPAC fell 40%. So it's kind of one of the things, buy the rumors and sell the news. So we just have to be careful on some of the valuations that at these SPACs, and depending on what they want to do with it.
Yeah, Josh Brown over the Reform Broker had a piece that he put out this week, kind of on the speculative mania, and just everyone's getting funded. There's just this looking around and seeing everyone racing ahead and making money on all these different things. And his point at the end is similar to what we've talked about. I think we gave the analogy before of being in the stands at a football game and it's okay to be a spectator. And he used the analogy of a parade. He goes, it's okay to sit there and just watch this thing go by. It's fine. You don't need to participate. And eventually the parade ends, as all parades do. But it is the mania is definitely something. So, Cody, we know you collect your corals. But when it comes to other collectibles, like what did you grow up collecting? Were there things that you thought, this is going to be valuable someday?
I think I was too young to actually think about it on a valuable standpoint, but I did have Beanie Babies. I had Pokemon cards. I had baseball cards. Thinking back to it, I wish I still had them. I have no idea where they're at. I mean, I'm sure they're in the trash somewhere or someone has them now. But thinking back, I'm sure I didn't think they were collectible, but I wish I did at this point.
Yeah. I remember getting the Beckett guide for my baseball cards every year, and the most valuable card I owned was a Mark McGwire rookie card. It was worth $20, and I had it in plastic. And one day somebody came to me and said, "I have a Steve Sachs rookie card and some other guy, and combined they're worth about $20. You want to trade?" I thought, get 2 cards for the price of 1, sure. And so I traded it. That was my first indication that I shouldn't go into a business that involves trading. So Steve Sachs card did not work out well. All right. Well, if there are things that are popping up, things like SPACs or NFTs or some of these really kind of wonky new devices and investment terms or anything else that you want to hear us talk about, let us know. Shoot us a message. Happy to include in one of our next commentaries. In the meantime, I hope you and your family are doing well. Enjoy the melt, depending on where you are in the country, and we'll catch up with you soon.